Wednesday afternoon, the 25th of May, we're going to discuss the S&P ongoing, what to expect, and when. The basic idea we've talked about is repeatedly that we're in a bear market, and now it looks like other people are beginning to say, well, we're in a bear market. And the bear market that we're looking at, though, is not a quick crash kind of thing that'll be over quickly and then it's done. We're looking at an ongoing 2 to 3 year bear market where 2022 is the beginning of it, and 2023, 2024 would continue. The analog that's most familiar that we've discussed is the 22-year cycle, the year 2000. The dates in the year 2000 have been repeating very, very closely. The price action is not identical, and it won't be identical for any of these cycles, but we use them because history has a way of repeating the same sequence of dates. And sometimes the dates flip, sometimes the highs are lows and the lows are highs, but in the main cycles, in the big ones, where you have a 20, 30, 50, 80-year cycle, you'll see that the small cycles tend to adhere to the bigger one, and if the trend is down, then the smaller cycles will wind up lining up the same way they did eventually. And in this case, they've been doing extremely well in terms of repetition. The three cycles we're going to be looking at, aside from the 22-year cycle in the year 2000, is the 60-year cycle, which we talked about early on in 1962, matching 2022, and the 120-year cycle, which is 2 times 60, which is also aligning closely with 2022. And the reason we're looking at them is because we found that the 60-year cycle is quite well known and is quite important overall in the stock market. If you look at the 1949 low in the stock market, 60 years later, you have the 2009 low in the stock market. And if you have a closer inspection of the rally that took place from 2009 until now, 13 years later, it's not that different than what happened between 1949 and 1962, which would be where we are in the development of that cycle. Also, the 120-year cycle may even be more important because it turns out the planetary positions are more in line than they were back 60 years ago when Jupiter and Saturn were repeating the same positions that they have now. All right, so look at these three charts. 1902 would be 120 years ago. The year 2000 would be 22 years ago. And 1962 would be 60 years ago. And in inspecting those three charts, we're looking for the commonality that they have. We want to see when they agree with each other. Because when they agree with each other and these overall cycles have been repeating for some period over a year, in some cases as long as 10 years, we want to assume that those dates where they agree and where the high and low points agree may very well happen yet again now. Okay? So take a look at the 1962 market first, and in the upper part of the chart, you see the present market, and it starts in November of 21, and there's a horizontal purple line there that says the beginning of this year, 2022, and then there's another vertical line, a purple line, that's saying where we will be on May 16th, where we were on May 16th. And it turns out May 17th in our market was a high, and there was a high there. In May 16th of 1962 was the correlated high point at that time. And then it fell pretty strongly till May 29th. It had a rally till June 6th, and a final low June 27th. From the high to the low was 29%. The high in January to the low in June was 29%. Our market has touched the 20% level, and since that low 3 days ago, our market rallied and went up even today. And so from where we are now to the correlated same position that we had back then, if we do the same thing, then we'd go down another 10% in our present market. But we don't know for sure that the size of the action will be repeating, although if you look at the pattern, you can't ignore the fact that it's extremely similar, and there is a good chance that something similar will continue to happen. After the low, June 27th, we have a rally over the summer, which we've been talking about as an opportunity perhaps to go long, and then another decline that ends in October this year. And then that market went up for a long time after that. That would be the end of our bear phase based on the 1962 pattern. If you look now at the 1902 pattern, twice the distance, but again 60, 60, 60, you want to see if the 60-year cycle is actually repeating, and it turns out it is. There was a high on April 24th back then, and a high in our market on April 25th or 6th. And the swing high and low points are written on this in the blue on top of the data itself. May 15th would be a high point in this market, similar to the May 16th in 1962 and the May 17th that we actually had this year. And then it has May 19th as a low, and we had that. And then that one went up till May 29th, and then there was another high on June 11th. So they don't completely agree that there's a June 6th high. But what they do agree on is that June 27th seems to be the end of the whole thing. So a high April 24th, which started our most recent decline, the one in January, of course, was earlier. And then the low in June 27th would line up with the 1962 market. So the 60-year cycle, both patterns agree that June 27th will be a low. All right? And then it goes up, goes up in July, August, into September. And it goes down hard again, just like the 62 market did. However, the difference is in 1903, the market kept going down, which is different than 1963. All right, so there's a deviation there. We will have to look at other tools in order to discern which of these two is more real. At this point, we're favoring the 1902 market rather than the 1962 market for the long-term storyline. And we'll talk about that later. Next, the third chart here is the chart of the year 2000. And we've talked about this repeatedly because it's extremely similar to what's happening this year. Our price action is a little more bearish, but not much. And what's interesting is the Federal Reserve on May 5th in the year 2000 raised interest rates by 0.5%. And this year it was also 22 years later, it was the next time in history that they did the same thing. Between the year 2000 and the year 2022, there was not one time that they raised interest rates 0.5%. And because we were looking at this pattern prior to that, there's a very good chance this is indeed repeating. If you like these videos and you find that they're helpful, we would appreciate it if you would give us a thumbs up on your computer or your phone, because the YouTube algorithm that is coded to look for the thumbs up percentages will tend to attract many other people to our site just by counting your thumb. All right, so look at this one. Again, May 16th comes out as a high, like in 1962, and in 1902 was the 15th. May 29th is a low in this chart, as it was in 1962. And June 7th instead of June 6th turns out to be a high in this chart, but again, very similar to 1962. And then June 29th is the final low before a decent-sized rally over the summer. June 29th is very close to the June 27th date that came up in both the 60 and 120-year patterns that are extremely similar to what's happening in our present market. So if we had to make a forecast, which is what we do, we would say we're still in a downtrend until May 29th, and then more likely in a downtrend until June 27th or 29th, and that one would be inclined to continue to short rallies as they happen. This day, the 25th of May, it turns out we think might be a short-term high point where the market will fall down to the 29th before rallying fairly nicely into early June, as several of these patterns indicate. We could have a high either June 6th, June 11th, or even possibly June 15th before it falls down to the final low in this sequence on June 27th or June 29th. Okay? So the end of this story here is that we're looking for a downtrend until June 27th with a potential earlier low on May 29th and a high either June 6th or 11th before a decline to the possibly the lowest price in the 6-month decline in June on the 27th or 29th of June, and then a rally over the summer. We do not expect the bear market to be finished in June, but it could have a nice breather over the summer, which would allow people to buy some stock. All right, thanks.